Everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Friday, June 25th, nearing quarter end and halfway through the year already. Can you believe it? Before we get into our Forex trading and crypto market currency analysis, let's give you our disclaimer just to remind you that this webinar and video is for illustrative and educational purposes only. And we're going to talk about a whole bunch of trading signals going on that are active in the currency markets and the crypto markets. And they are high probable Japanese candlestick patterns, which there happens to be a book called High Probable Japanese Candlestick Patterns written by myself, Teddy Keckstedt. It's available on Amazon.com in paperback and Kindle versions. Check it out when you get a chance. You're going to like these signals we're going to talk about today. All right, we have our live action screen. If you have not done so already, we just have our YouTube channel pulled up just to show you and remind you that if you haven't subscribed, please hit the subscribe button on here. If you don't have us up on YouTube already, if that's not how you're watching, or if you're just watching the stream off our website, you can always do a search Forex Trading Unlocked on YouTube, and it'll pull up our channel, and from it you can see our recent uploads, you can see our created playlists, our featured channels, and obviously all kinds of lessons and things that we've done over the years and stuff, and recently and old stuff as well. And if you're watching on Twitch, or if Twitch is your thing, you can also do a search for Forex Trading Unlocked. As you can see, we're streaming in, it's like a mirrored effect because it's live. You can access the chat and other things here. Let me clean up that browser. Here we go. So the Forex Trading Unlocked, as you can see, it is streaming right now. You can watch the chat and what have you, and get to know us through Twitch. All right, so we have the forex-trading-unlocked.com website pulled up. If you want to interact with us on the chat on Twitch or on YouTube, please feel free to do so. All right. So, and now let us get into it. So we have our workstation page pulled up, and we're going to toggle on down here, and we have the dollar index chart pulled up. Very interesting what is going on here in the dollar index. So the dollar index, we had a bearish engulfing line sell signal that had occurred. So now this bearish engulfing line sell signal, ironically, is something that has also touched off many signals in the rest of the currency markets. So we'll see how the dollar index is setting the tone and is our current guide for what is going on with the action in the currency market. All right, so if you look at this bearish engulfing line, you can see that it happened on Monday morning, actually overnight early. The market started rocking and rolling right off the bat in European time. Now, I don't know if what hours you guys watch and which markets you're all into, but to start the week off Sunday, we had a big move in the treasury bond market as well as in the currency market. So this here set off our sell signal. We're viewing this as right now, just a correction. We are still in a bull market. We are coming off of a higher move high after a much higher move low. We did set a higher move low yesterday, or 2 days ago. So it'll be interesting to see how the market trades over the rest of the session today on Friday. But I believe that we still have a good chance, even if whether this is a correction or a true full-blown trend change back to being a bear for the dollar, we could easily get down into, if we look at a Fibonacci, we use our 50% rule always, and our 0.618 here, and this puts us down in this little range right here. So let's give us a little idea here for pricing. So this little basket here over the next week or two, especially a couple of weeks, if this correction is going to maintain its momentum, you could expect to see the dollar index fall into this area. So this is going to give us our guide, especially for the major currencies like the euro, the pound, and a couple other ones, as far as what direction they're probably going to maintain as far as trend over the next just few sessions and even possibly into the next few weeks. I would be critical for sure of the dollar index, where if you have a reversal, especially in the euro and the pound, and they become bears and the dollar becomes a bull, a challenge of this level here in the dollar index definitely confirms a lot of strength. Now, interestingly enough, we do have this gap to fill here in the dollar index that was left here. This was April 21st. excuse me, April 5th to April 6th. So in one day's time, the dollar index had a big sell-off. So it's possible that we could still make a spike high, fill that gap, and then maybe have a digestive period for a little while. But right now, we are short-term bearish, looking for at least a test of 90.95 in the dollar index. So let's go and look at the Euro US dollar and see what's going on live here. We have a bullish engulfing line buy signal. This is another high probable Japanese candlestick pattern. This one was triggered on Monday and is continuing to put a little challenge up against resistance. We had most of the gush on Monday, but we definitely still have a little bit of action here. So let's use our Fibonacci to figure out some price points here. Now, if you want to know how to trade these signals, you read the book High Probable Japanese Candlestick Patterns, and it gives you the actual defined targets on how to figure them out. But we like Fibonacci for no matter what, for the 50% and 0.618 for finding good support and resistance areas. So our risk here on this trade would be the low set last Friday, so a week ago. That is our risk level as far as being a bull. Any trading below here at $18.47 will have this market in a bearish fashion again. Okay, so believe me, if I pull back on support and a failure from here definitely is a negative signal. Remember, short term, the Euro US dollar has been making lower move lows, lower move highs, lower move lows, lower move highs. We're coming off a big extended lower move low. So having a short-term correction like we're having right now is definitely very normal. If this is a true full buy signal and this is a short-term trend change, remember the overall trend for the Euro US dollar has been sideways now for months. So we could be just heading back up into this upper period of this part of this range right here. Once we settle into here, it's really likely that resistance will be very heavy and we'll start to chop back down here. At least in the short run, I think that is most likely what's going to happen if we have bullish follow through. Right now, I'm long, so I'm looking for definitely a run up to $1.2055. I think it's a good risk reward ratio, especially considering got in right here around $1.19.15. So we're not up in this trade very much right now, but our risk here is less than $1, and we're looking to still make another $1 at least, upwards of $1.50. So we have a good reward to risk ratio going on this buy signal, and the only thing would really, well, could stop us out here if it gets down to $1.1847. So, because then I would be very, very leery of any momentum as far as buying coming into the market if we fall back on support in that way. So remember, key off the dollar index. That's one way to give you an indication of how these things are going to possibly occur. Okay, so let's continue forward with this and see what's going on here. All right, so we have our levels for the Euro US dollar. Now let's pull up the British pound US dollar. Now, always be mindful of the fact that when you have a big dollar index move, that has a lot to do with the fact that we have the pound and the euro are the biggest components. So if the dollar index has a big buy signal or sell signal, that's why you typically have this correlation in the pound and the euro. Not always, but often. And this time we did again. We had a bullish engulfing line buy signal triggered on Monday. This was another part of that currency trade where the dollar really was in play. We had a 30-year interest rate move of over $3 full in the 30-year note. 10-year Treasury futures notes were all over the board as well. Now, for those of you that don't pay attention to interest rates, you should, because interest rates are a function of currency pricing. And whenever you have a radical move, ironically, we had a monster move overnight in the debt markets before they even opened up in the United States. It was just on the computer, while the currencies were slamming all over the place as well. So big money. It wasn't algos that was triggering this stuff. This was definitely big money. So we'll even review this when we get into the cryptocurrency stuff too, about what was going on over the course of this week. And it's stuff I think you want to be very mindful of as far as what's going on with that stuff. All right, so we have a bullish engulfing line buy signal here. We're going to do the same thing to find a potential price target. Should our buy signal be solid. So our good old 50% rule is always a nice little go-to level. Remember, the 50% rule has been used for well over 100 years as a reliable retracement area when it comes to Fibonacci and Gann, as far as just price movements and what have you. And especially when you've had an exacerbated sell-off like this, remember something that I always try and not just reiterate, but markets go out like they come in. So when you see how this market came very volatile, having a reaction at least up towards here, and you can see we almost hit the first support resistance target. That is very likely. It's usually what happens when you have this type of market action. So there's a symmetry to the market waves that go on, that are moving on in all markets. So anyhow, right now we are looking for a challenge of $1.4017 up to $1.4073. This position has a risk level down here from the low from Monday, and anything below $1.3787 would have us back on the bearish campaign. Remember that this market is in a short-term daily and weekly downtrend. It has been making lower move lows and lower move highs, and this is something that you definitely want to be very mindful of. Okay, remember, the trend is always your friend. It is not just some trite adage that people tend to use. It is very important. It's the one thing that I have to say is, typically for most traders, you will usually do best by sticking with trading the action and not the reaction. So in other words, don't try and always look for a top or a bottom, which you should never do actually. But don't worry about the counter trend trades. Look for the major long-term trend, where if you still believe the fundamentals are there, always look for buying opportunities in a bull market and selling opportunities in a bear market. These are the things that definitely will keep you on the right path, when it comes to these things. So just to be very mindful of these things alone will help to protect your wins, and also help to encourage more better money management principles when it comes to your trading, which that is usually the death of most traders when it comes down to it. And if most traders are honest, they know that, the reason they have failed as traders or struggle as traders is because they follow very poor money management rules, or let alone don't have them. So once again, we're looking for a challenge of this little area here. It's very likely. I mean, we're coming off a lower move low, and we made a lower move high also just a couple days ago. So if we come back and turn around and we breach this high from Wednesday, it is got us right into this area here. Now this would be a good corrective area. Remember the dollar index, where we were showing you how far it was expected to go. If the pound gets up into this area, and if the euro US dollar gets into the area we had shown you previously, that would coincide with the dollar index. Now interestingly enough, sticking with the European sector, we do not have a sell signal that was triggered this week. We do have a short-term correction going on. So here we're going to key off of the high from last Friday, and we're definitely seeing that we're coming off a higher move high. We're trying to establish a higher move low in the long run, because the short-term trend is obviously bullish. Interestingly enough, remember how I said markets go out like they come in? Well, we rallied big here, and now you can look at this pause here. So I think this is very interesting, and this is why I don't believe the dollar overall is really much a bear. I think it's just a correction right now, especially with the euro and the pound. If the US dollar is holding and not selling off and coming back like it came up in this wave here, while those other ones are pushing the extremes, that tells me that big money here is not finding a flight to quality in the European currencies, especially the stable Swiss market. Overall, this market has been in a bear market. So you could say that we're coming off of a lower move low and have made a lower move high in the long run, which is definitely a fact. So we'll put this downward sloping resistance line. As long as we stay below this little channel right here, I would say, look for a buying opportunity again down here somewhere. I would be very cautious selling this, because as a basket for the European situation right now, they should be trending and moving, not necessarily completely in tandem, but the volatility doesn't make sense here, meaning that we should usually see a little bit more of an anxious sell-off here and testing of support. But we are still bearish, and we are looking for this market to correct back down to this area here around 90.80 down to 90.40, somewhere in the support band. This would also line up with our dollar index. So once again, let's look at the Dixie chart so this makes sense. Remember, we had the sell-off here, so if we continue to head down into this area here, that would also coincide with our Euro US dollar prediction here to travel up into this area. Remember our initial resistance target here of $1.20 up to $1.21 basically. These all would work symmetrically together. So British pound, US dollar, once again showing you the same thing. And then the US dollar Swiss, which is an inverse chart, doing the same thing to the downside. So right now we do have a nice correlation going on with the European currencies. However, the volatility of the Swiss really gives me a sinking feeling that this is only a short-term correction, meaning dollar bear for the next like 3 sessions to upwards of a week and a half, 2 weeks, as we head into, remember, we have the July 4th holiday coming up too for the U.S. So for those of you that are outside the U.S., it just means thin markets and quiet markets because volume will drop a little bit for that weekend. Remember, in a week from Monday, the U.S. markets will be closed in observation of the July 4th holiday, which obviously is over the weekend. So that Monday, the markets will be closed. So sometime after that period there, in fact, we'll mark it here with the Swiss. So we had July 5th. That's when markets come back online. This is where I think you can come down, sink into here, and then round out a bottom as we come out of the holiday. We start third quarter, and then boom, I think we'll start to see a rally once again in the U.S. dollar. Now, if we have trading below 90.40 here, that would be very bearish, and then I would say the long-term downtrend is intact, meaning that we will have very bearish momentum for the U.S. dollar, except for when we look at certain things here. Now, this is the interesting thing, is that while the dollar is under pressure with these other currencies, when we were coming out of this pandemic scare and everything with the markets, now they're starting to trade pretty much more on numbers and things that normally dictate market movements. U.S. dollar yen has been a continuous bull inching higher through resistance, making higher move highs and higher move lows. If we settle down at this level here or lower today, then this won't be a potential 3 inside down sell signal. It would confirm a short-term sell signal. However, this is a counter trend sell signal, and with the momentum in these other currencies, it's going to be interesting to see if we are full flowing back to normal or not. If that is the case and we see the euro and the pound continue to rally against the dollar, as well as the Swiss, meaning the US dollar Swiss go down, then the US dollar Japanese yen has a very good chance at being in a holding pattern to actually coming out and making new highs. Because when you have the dollar getting beaten up versus those currencies typically on a trending basis, you usually have the US dollar yen going the other way. One of the ways you can see that is because this market has been going up US dollar yen, meaning dollar strength, yen weakness, over the past couple months, whereas it didn't come into play with the other major currencies versus the dollar. So we'll see how this market settles. Be very cautious. As long as we are below a 111.12 here, I think you are fine playing a short. Right now we have a low risk area to be short against. But above this area, we are definitely bullish. We have 112.5 up to 113 even as our longer term upside price targets. Be cautious with this US dollar yen trade. Overall, this market is a long-term bull, so don't try and pick a top. We're coming right into this little buffer zone here where we had this high from months ago. We capped out at multi-month highs, so this is typical to have a little resistance as we double top here. Maybe see a short-term sell-off, so we'll see what, as far as if we had a big sell-off in the US dollar yen, and we're just going to use the 50% line on this one. I could see us coming down to this 109.30 area. I really don't see us getting further than that, and where I really see it coming more is like to this area here. For any short-term sell-off with this sell signal would be more around this $1.10 or 110.18 area. Okay, so for the US dollar yen, we are still, you got to remember, trend is your friend. It is a bull, but we have a short-term potential sell signal forming. We won't know until the close of today, so you won't be able to act on it until Sunday evening. And you have to read the book High Probable Japanese Candlestick Patterns to learn how to actually trade it anyhow. But we can tell you one thing, your risk level is right here. You don't risk by just a few pips beyond that. Anything above that, you definitely are on the wrong side, and the sell signal is blown. So remember, they don't happen 100% of the time, but they do work a lot. This is going a counter trend signal, though, so be very cautious in that, in using it. We usually like to go with signals that go with the overall longer term trend, because then once again you are trading the action where most of your market movement is versus the reaction, which is usually violent. And unless you're on the right side and nimble and get out real quick, you usually don't capitalize as well on that one either. So don't get chewed up or chopped up. AUD, US dollar. So we're getting close to these cryptocurrencies. We're going to get through these last few regular dollar crosses very quickly. We have a continued sell-off in the Australian dollar, US dollar, with a rebound this week since last Friday's trade. Interestingly enough, we didn't have any buy signals, so we're just viewing this as a short-term correction to the upside, where the dollar is right now a potential bear with the dollar index. This is our extreme that we're looking for, is 76.83 for just an upside correction. And that would be kind of a good area, because if you look at, there was a lot of support right in this area here. So, and even if you put it down, yeah, right around those lows, it's right there. So that would mean that this area here would be a good spot for resistance. This would coincide with the dollar index support area and have a good chance for us to all of a sudden look for a nice area to sell right around this area. At least that's what I'm looking for in this intermediate term. So we're looking probably sometime between next week and right after the U.S. holiday of July 4th. New Zealand dollar, U.S. dollar is pretty much doing the same thing as the Aussie dollar is right now. We didn't have a buy signal this week, but we do have a valid correction going on. This one here is already almost at its 50% level. That's another reason to give us an idea that this theory on the dollar correction is only a correction for the dollar index and these other currencies, and then we're going to go back to the overall trend, which is bullish the dollar in the short run, or intermediate run rather. So we'll see how this goes. I think this challenge of 71.19 will be where you run out of gas. Notice once again we have a lot of lows here where it was support. Support now should become resistance if it is a valid corrective area. So we'll probably see a little digestion, and then a fallback on the support coming back towards the 70 even to down to 69.5 area. Now let's look at the US dollar Canada. This is another interesting one that had a dark cloud cover sell signal on Monday. This is another very valid high probable Japanese candlestick pattern. So for this one, we had a big corrective wave. Now remember, this has been a bear for 16, 17 months. Markets go out like they come in. So we had a big rally, and then boom, we've already had a nice volatile break. I still think that you have a little bit of room to the downside, but not much. We already had almost come down to it. So maybe we have another test of support down to this 0.618 area, and then I think that will be it if the dollar is only in a short-term bearish corrective phase. Any trading below this lower 0.618 level at $1.2187 confirms that the longer-term bearish market is in place. And remember, this is a bear, and we can use this from this trend line here, and we'll just put this into right there. Okay, so the downward trend is obviously in place. We've come up into a nice area. It's amazing how we drew that downward sloping resistance from those points to here. We rallied right up to the line, boom, dark cloud cover sell signal, and then boom, here we already almost came to our first target of $1.2247. I still think we have a chance of getting down to $1.2187 over the next week and a half. Like I said, as we get into and through the July 4th holiday, round that out and then find some support. You know, like I wouldn't doubt that we can find a. Let's see, I gotta have to move this. Okay, let's move this over here. And let's move that. Okay. So let's just say that we find a little support here on this upward sloping support band here. That brings us right into this little area right here. We hold up, find some little common ground, probably chop around for a few days, and then boom, make another run. No matter what, we would be kind of wedging and looking for a longer term breakout this summer. Maybe we're setting the tone for a big sideways trade. I don't know. We'll see when it comes to US dollar Canada. So, but right now, down into this little area, I think that will be the extreme. and then we'll see what happens next week and stuff, and see if we can find a buy signal basically to look for. All right, now let's go to Bitcoin, BTC USD. All right, we have Bitcoin going on here. We have a potential falling three methods continuation sell signal forming. If we can get a lower trade still today and get down towards the lower end of this body from 3 days ago, or settle down somewhere basically around this area here, somewhere around 31,000 today. If we get down another $2,600, which is easy to do in this market, right, folks? If we can get underneath there, then I would say look out below this weekend. We're going to start seeing Bitcoin trade into the middle to lower 20,000 area. This is a very reliable continuation sell signal. Now, we've been trending lower for a while. We've been trending lower for the past week and a half. We had this nice little 3-day correction. Doesn't look like it wants to hold, does it, folks? No, it doesn't. So we'll see what happens by the end of today. And if we're below 31,000 by the close of today, and as we roll into tomorrow, Saturday's trading with Bitcoin, I wouldn't doubt that your weekend Bitcoin currency traders start to really unload. Anyone that's still up at the lower levels might be taking a little cash off the table, and those that can short it or try and whatever, I think they're going to. So I'd be very mindful of it. If you're trying to buy Bitcoin right now, I would look for buying opportunities coming after today. Now, should we stay where we're at or close higher? Totally different story for Bitcoin, but right now we are looking for a potential follow through to the downside. Let's look at the XMR USD Monero here. For Monero, we don't have anything but a sideways to lower trade building up, potentially looking to make lower move lows. I think it's following Bitcoin and the rest of the cryptocurrencies. We have obviously a very steep downtrend that's in place here. By attrition, we should be coming out of this after the July 4th holiday if we just are in a consolidation area, which for this market, it does look like between here and here, we are holding a base. So we'll see what happens. We're not bearish this market. We're not bullish. We're pretty much just neutral on this one. Now let's look at Ethereum US dollar. Wait till we get to Doge. You're going to love that one. This one here, however, is doing the opposite. We do have support right around here. And this one really looks like it wants to go lower. As far as technology, we love it. We're just going to have to wait and see right now with the pricing. I think that as Bitcoin slumps, you're going to continue to see this one slump as well, but you can see that it is not as severe, and I think what you're just going to do is see support kind of get hammered down, maybe down towards this 1500 level. Now, interestingly enough, Doge, which everyone is now so down on, and I'm not exactly the biggest up guy on it, but this one here has a buy signal that was triggered this week, and interestingly enough, we are kind of getting right about to where I think you're going to see it stall. 30 cents seems to be a psychological number in this market. I've been hearing all kinds of people that don't even trade the equity markets, let alone the cryptocurrency markets, talk about 30 cents. In Doge, obviously we're trading below it, but I think this is a good little spot for this area to rally up to. So this little bottom here, this big break here, and then these following two up days here, this is called a 3 inside up buy signal. 3 inside up buy signal. And once again, you can learn how to trade these signals by reading the book, High Probable Japanese Candlestick Patterns, available on Amazon.com. And you can always go on our website, forex-trading-unlock.com, under product sources and services, hit the High Probable Japanese Candlestick tab. All right, so back to Doge. All right, so Doge, as far as technology and overall cryptocurrencies, I am not a bull and don't really like this thing long term. I just don't see it really maintaining any type of real strength. As you can see, we have had a really steep downtrend, and now we're trying to pop out of it. I think you have a lot of people now coming in at this 20 cent upper teen area saying, hey, if this stuff has even the remotest chance of going up back up to 30, 40, 50, 60 cents, in the short run, it's worth a gamble. You have a lot of gamblers out there, and you have a lot of people doubling down. That is a bad way to trade. That's called cannonballing. I tell you that will only lead to problems. But right now, here we go. We have the short-term buy signal. It is a counter trend trade signal. So remember, if this falls apart, use the low from a couple sessions ago. Any trading below 14 cents here, folks, and guess what? This Doge thing is dying. I would say just forget about it and just watch it fall and fall and fall and fall and fall and wait till it gets down to maybe a penny or 2 cents again if you want to throw some, just waste a little funny money. It's kind of like the lotto then. And looking for a bounce. Once again, if it wasn't for the fact that the technology for this does not seem like it's going to maintain and grow long term, this becomes nothing more than a speculative basically meme stock in the cryptocurrency market. So be very mindful of that. Your risk level is 14 cents here. Below here, you're going to get hammered even more. But right now, we do have a looks like we're going to, right, today's high fell just short of our 29-cent target. There's not much left in here, so I don't know if you really want to even play around with this area, but at least you know your risk is about 14, 15 cents. Anything underneath there, it is not good. So we don't have any questions on the chat today for a Friday. It's interestingly enough. So once again, we have the Doge with a buy three inside of a buy signal has been triggered. XMR US dollar Monero, once again, this is kind of going sideways. Now let's say the Doge signal is correct and we continue to pressure upside. That would help XMR US dollar continue to go sideways. And as far as the Ether US dollars, that would probably help to hold that one as well. As far as BTC US dollar, this is what we have to watch today, is the potential following three methods continuation sell signal. Now remember, it has to get around 31,000 or lower today and settle down there for this to confirm this continuation down signal. That would have us, one, completely laying on support where it's 1, 2, 3 times a charm, tried to hold it, 4th time, yeah, we're going lower kind of thing. Or we settle where it's at right now, or even get a rally that turns around and then, hey, you got a bullish breakout on your hands, you know. So we'll have to see how that goes, you know, over the course of the next few hours as we get through our Friday's trade. And remember, downward sloping resistance is coming right into here where we capped out today for the Bitcoin US dollar. No questions on the cryptos today, huh, guys? All right, so let's go see real quick again what's going on in the actual real currency markets here. We'll go for one more lap around the globe. So Euro US dollar here, we are right in the middle of the range. It's becoming a sleepy day in the markets. This is kind of nuts when it's 10:30. We only have 5 hours left of trading, and we are right in the middle of the range. I'd be very careful. Remember, once again, we're heading into a holiday week, guys. The biggest thing you have to remember is that volumes will be thin. You will have vacuum moves. We could have some extreme moves. So if you're in a trade, just keep your stops manageable and be mindful of if you're in a trade, ride it and see what happens. But I would say, as far as entering a trade, unless you have really valid trade signals and you're being disciplined, which you should do, and if you're doing that, then it's all, by all means, go in and enter the market. But I'm just warning you to be mindful of what's going on with those things. And there is something that we only touched on a little bit. Let's look at what's going on with the gold market. And why? Because XAU US dollar had a little buy signal on Monday, and this one is barely holding. This is another reason why I think you have to look at this current dollar bearish correction as just that. If gold starts to fall down and go lower again, we are going to most likely see momentum in the dollar go kick back to the upside. So any failure here is a big deal. You had a bullish engulfing line buy signal here. We're looking for a correction back up to 1825 to 18.5. That would be something that would really give us a good idea that the Euro US dollar, once again, once it gets to here, if gold does that type of correction and stalls, boom, we're going to see this market fall back on support again, meaning that the dollar index, which will help to be your guide, should find definite support in this area. And once it does get into that area, we're looking for it to come back this way, most likely. Now remember, that would be when the Euro US dollar comes up into here, and then it starts to come this way. Okay, so those all coincide with each other. Okay, there's the dollar index, there's gold, there's the euro US dollar. Now here's something also. When you use our forex-trading-unlock.com website, under the markets tab, under futures, now futures are always in a lag, so this is from yesterday's close. You can't broadcast futures live because it's against the law. You have to be paying for data in order to view it live. Okay, so if you look at the 30-year Treasury bond on a daily basis, just like the currencies we were looking at had all this market action on Monday, look at what this did. Now, for those of you that are not bond traders or interest rate traders or watch it, you should for being a currency trader because it impacts dollar pricing. This market spiked high at this is over a $3,000 range for the bond market, which normally has less than $1,000 range a day, where it doesn't really trend very much. Since then, on Monday, it has gone sideways. Okay, so that is a big deal as far as falling into our, if the Treasury bond market spiked a high and is now going to stay where it's at or trend lower, then that would help the dollar strengthen, which would mean the euro US dollar is going to fall this way. The British pound US dollar will then do the same, where it should start to fall back off of that area. Then we go to the US dollar Swiss. Now remember, the US dollar Swiss, which we looked at, this one didn't have any signal, but if this scenario is also the case, then we should see the US dollar come up this way and then see a breach of this 92 area as we come out from this downward sloping resistance area, and momentum should grow in the longer term with dollar strength. US dollar JPY, if this is a valid sell signal and we only come down to here or even in this area, then it would be something where we could come into here and then boom, we start to go back up that way. Now remember, with the Japanese yen, this is a potential 3 inside down sell signal forming. We are not bearish until actually the signal forms, and then there's that risk area there. Otherwise, this trend is still higher, so use caution. Now for Australian dollar, US dollar, this would also mean the same thing, that should we trade up into this area, then we should be coming back down here if the dollar is truly acting like we are talking about. New Zealand dollar, US dollar, the same thing is also true with this one, as where it should come into this area here and then come back down onto support. And then the US dollar Canada, this would be the same thing, where it comes into here and then we will see maybe a breakout of the overall long-term trend for the US dollar Canada. So we've looped around the world real quick. One last look at the cryptos, and then we're going to call it a day, folks. So once again, potential 3 following methods forming in the Bitcoin US dollar. We shall see if it does manifest or not. And then also we have the XMR US dollar, looking like the same pretty much as that one, looking more sideways than anything. We have the Ether US dollar doing the same, looking to hang on some critical support. But then we have the Doji one that we really don't like as far as technology, that has the buy signal and could help to lift those cryptocurrencies. So remember to use forex-trading-unlock.com for all your Forex information, and use our tools and access charts faster than you can on anywhere else, and not have all kinds of pop-ups and just nothing but marketing slammed down you. But speaking of marketing, products and surfaces here, high probable Japanese candlestick patterns, which we've been talking about. You can watch a little video on it on our page here about the book, and you can also check out the book and either buy it, share it, or preview it and actually read a little bit about it. Now if you're an Amazon Kindle Prime member, then you can read this book. You don't have to buy it. You can just go and check it out on Amazon, which we would appreciate it. Pass it on to your friends. Remember also, if you haven't done so already, to like and share us on YouTube, and also to pass it on to your friends as well. So thank you very much for your time today. And remember to subscribe once again to our YouTube or Twitch channel, Forex Trading Unlocked. I want to thank you very much for all your time today. And if you leave some comments with our videos, we will answer them and get back to you. Oh, thank you for that little comment on YouTube. We appreciate you hanging in and visiting us and watching our stuff. So you have a good weekend, and we'll see you guys soon. And yeah, leave any questions about any markets, and we'll include them in our next video.